Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market a bit later than usual. We'll keep the eerie lighting feel for the video tonight. So, same thing as Friday, with one difference. We're stronger than Friday. It's the same setup in the sense that we see headlines bring the price down during futures trading when a lot less dollar volume is dictating price movement. And as soon as the bell rings, the buy switch is flipped and the bulls just buy all morning. And you can see the low of the day, both Friday and today. We've seen lower opens 3 out of 4 days in a row. Every single day has been bullish that we open lower. This is the second highest close in the history of the S&P 500. And the bulls are completely ignoring headlines. So what that means is I am completely ignoring headlines until price action and volume tell me to start paying attention to them. So obviously that's not my world view. That's my stock market trading view. But it served me very well because if you watch Twitter the last 3 days, it's the end of the world and the market's going to crash, when in reality all it is the bears that have been calling for a crash and been wrong for 2 months. They're now trying to rally around this fundamental change in the Middle East and hoping that that causes the catalyst for the crash that they've been looking for so long. So we will continue to ignore that, and we will continue to use price action and volume to dictate our biases in this market. So what's the difference between the last 2 days? Not a whole lot. Looking at pre-market, we saw the move up Friday morning. The bulls bought all, that's actually today. Saw the move up Friday morning, bulls bought all morning, and we topped out. And what was the shift for the top? It was a fake headline about a base being bombed. And that was literally the point where the bulls lost their momentum. And the bears didn't get much follow through, but they got enough to derail the bulls, and we consolidated a little bit into the close. We didn't have that today. It was just all out bull mode, and we closed right at the high of Friday. We did break that resistance level in the last little minute of trading, just barely. We have not changed the hourly trend yet, so we're not going to lose sight of that. This entire move took place from the low of pre-market, no hourly trend change. So into tomorrow, we will need an hourly higher low and higher high to have confidence in a new all-time high test, because that's the only resistance that we're looking at this point. 324.89 all-time high resistance as bulls are in full control. Our daily uptrend has not been lost. If potential World War III cannot lose our daily uptrend, what's it going to take? It's going to take the big boys and big money getting ready for a clear pullback. So anything above 320.15 was a higher low, and we held that level today by 21 cents. And the bulls are maintaining full control. IWM on the daily chart, almost a double bottom. We did break the low of Friday by 16 cents. I would consider anything under 166.75 as a daily low or high. So I'm viewing this as our high, low, lower high, lower low. So anything under that level is a lower high, but obviously the consolidation at this point is very bullish. And we look at the weekly chart, and you could absolutely call that a weekly bull flag right now. So I have not seen anything bearish at any point in the last month of trading. And look at the red days and look at the volume on the red days. And I've said it many times, if we're going to see meaningful red days, the volume has to be over the 20-day average. QQQ, second highest close ever. Resistance is 215. Make that 216.16 the all-time high. We need an hourly trend change here as well. We are a bit extended. Just the fact that we came from 212 to the mid 215s with no hourly higher low and higher high. But all-time high is absolutely in sight as the daily uptrend is remaining intact. Bulls are looking at 212.24 to try and be our new daily higher low. XLF. So we did break 30.57. We've been watching that level, but again, just all buying on that break of support. So weekly consolidation is underway, and it is a potential weekly bull flag. When we lose daily uptrends and get no bear follow through, we zoom out and look for bull flags. When we break daily downtrends and get no follow through, we zoom out and we look for bear flags. So we're in uptrends on the daily. We lost the higher low, no bear follow through. And if we can see an hourly trend change for XLF, and follow through, then that weekly bull flag remains entirely possible. Anything under 3108 is a daily lower high. So again, I'm not expecting to just rip to an all-time high from here, as XLF has a lot further to go than SPY and QQQ currently do. But what is standing out is the lack of any bear follow-through. XLV held the low of Friday, closed right up at the high of Friday. I consider anything under 102.29 as a daily lower high. Pretty much the same setup as IWM. And weekly chart looks like a bull flag at this point. In order to not be a weekly bull flag, I need to see our current lows break on increasing bear volume sometime later this week. And if the bulls are going to convincingly regain momentum on IWM and XLV, we will top out eventually in the near term. Let's get a better tool here. That's not a better tool. We'll stick with the wiggly brush. We'll top out, have to hold the recent low, and then change the daily trend to be looking back at the all-time high, in my opinion. Again, I would be surprised if the bulls had enough strength to just go from here straight to a new all-time high. XBI, same thing. Anything under 96.03 is a daily lower high. Weekly consolidation certainly looking healthy at this point, and we will need a daily trend change. Anything under 96.03 is a lower high, and the same pattern that I just drew, we will have to see a daily trend change to try and head back to the recent highs. And the VIX pulling back. Week closes looking down at 1240 as a key level. We topped out at 1640. If the bulls can hold 1240, that's technically still keeping a daily higher low intact. And we're certainly much further above the 17s where we came from currently. So bulls do have some space to work with, the VIX bulls, but market bulls are just fine. Buying the dip will continue to work until it doesn't. And the play is buy the dips and just use stop losses, because you will be wrong eventually. And as long as you're not stuck holding a bag and sitting through a 10% market pullback, then the times where the buying of the dip works, which is 2 days in a row so far, will certainly outweigh whatever loss you take with a stop loss in place. Gold. So gold opened Sunday with a huge push up. The monthly bull flag is confirmed faster than I thought it would be. The fact that we have not consolidated on a daily time frame and straight to that bull break was surprising. Higher low every single day, 14 days in a row. But that looks like a volume climax and a bearish reversal daily candle. So I'm still watching the 4-hour uptrend. And if we see a 4-hour higher low form tonight, I would expect a lower high compared to 1588, which is our top. And I would expect a tightening 4-hour range. And then if we lose the 4-hour uptrend, we know daily consolidation is then underway. Silver is a bit weaker. Big upper wick, potential volume climax. The 4-hour time frame looks more like a head and shoulders. Still higher lows, but if we see this lower high and then a bear break, that is a head and shoulders pattern on the 4-hour, losing that uptrend and indicating daily consolidation to form a higher low is underway, keeping in mind that that would be healthy on both gold and silver, as we have not seen a clear daily higher low in a couple of weeks. So again, I'm still holding my long-term gold positions for the foreseeable future. I'll let you know if that changes. It's only going to change if we lose the weekly uptrend, essentially, at this point. Miners. What in the world is up with the miners? Why are they not going up? My educated guess, and it is a guess just based on observation, and I've seen it before in other sectors, the correlation between algos and bots and all these little pieces that make up the market is more significant with what gold does after the bell rings than what it does in extended hours during futures trading. So what I mean by that is, during futures trading, gold had a rocket ship. And we opened up with one 5-minute candlestick going from 1570s to upper 1580s. That's a huge move. At that point in time, we're not even trading in extended hours during the market. So all miners are closed. They did not benefit from that at all. And you would anticipate, well, doesn't that mean we're just going to open higher? Yes, and pre-market miners were set for a solid gap up open. But if you look at the price action of gold, both Friday and today, from the open of the morning. So the open of the morning, let's go to the half-hour chart. On Friday, we were trading at, let's make sure our date is correct. Friday was the 3rd. So we were trading, bear with me here, right here. Here's the open. So here's our gold open. Look at what upside gold saw. Gold opened at 1548, we'll call it. We went up $5 and we closed the day pretty much $2 higher. So gold went up $2 during regular trading of Friday between the open and the close. Today, it was even worse. So today we had an open and gold was trading at 1576. And by the close of the day, we were down at 1565. We lost $9. So Friday we went up $2. Today we went down $9, which means in total, from the open to the close, gold went down $7 during those 2 days of trading in aggregate. So my thesis is that the bots and the algos absolutely care about the price movement of gold relative to the miners, but they care more about the price movement of gold after the bell rings. A bit in pre-market, but more so after the bell rings when there's real volume and the real activity is going on. That is my thesis. I've seen it before in the marijuana sector. The S&P 500 will gap down open after a weekday of future or a week overnight future session. The marijuana sector will be holding on much better at the open. The S&P 500 will see an hourly oversold bounce when the bell rings, and the marijuana sector will benefit from that oversold bounce. Even though the S&P 500 is lower than it was yesterday, the MJ sector goes higher because it's correlating to the bounce and the volume that's taking place after the bell rings. I've seen that plenty of times. So that's what I think is going on with the current minor weakness where we are closing weak. I will be much more confident. I've been holding off buying any dips in the miners aside from little flips. I will be confident looking for a daily high or low as soon as we have clear daily consolidation underway for these metals. And that's not happening yet. I need to see a break of the pattern of a high or low every single day. I want to see a clear pullback, exponential support potentially even being tested in the next handful of days, and I will be looking for a bull miner daily high or low. Somewhere above, I consider anything above 27.47 a daily high or low. Yes, 32.87 is a support, but I'm not going to say the daily uptrend is lost if that little brief pullback level is lost. So, oil. Oil bearish reversal candlestick on the daily as well. 4-hour time frame still in an uptrend. It looks a lot like silver with the potential 4-hour inverse head and shoulders. I would love to see oil open higher tomorrow up around the upper 63s. I would then look for a potential bearish entry using 64.69 as my stop. And then I would hope for follow through, losing the 4-hour uptrend and indicating further daily consolidation is coming. Natural gas, anything under 229, I don't care about. It's just a daily lower high. Yes, there are short-term moves to be had there, but trading against a significant prolonged downtrend is difficult, and that's where we currently stand. We had a 4-hour trend change, currently a lack of follow-through. Bulls have to get over 217.3 for more follow-through. If we can't do that, it's a potential daily bear flag. So just have to be cautious that the bears still have full control of natural gas. So that's where we stand. The takeaway from the video is the market bulls have complete control, completely disregarding headlines. Volume and price action should dictate what our feelings, beliefs, and emotions are in this market. And the other takeaway is my potential reason for miners being weaker than metals. Hope you had a good day. We'll see you tomorrow. So some updates around the property here. You are witnessing the birthplace of a lot of the recent educational videos. I have a routine of getting in here every night and stretching, part of my wind down routine after markets close, but I also have a waterproof pen and paper that I dictate lots of the video ideas on as I brainstorm. There's also some confused bulbs that I planted earlier. They're starting to come up already, so I might have to cover them up as they're going to get too cold here. It's far too soon for that to be happening January 2nd. Got a fence put in to keep out the bears and deer and turkeys and all that fun stuff in the spring when these garden beds are popping off. Also looking forward to trellising a bunch of cucumbers and peas and beans and things along the fence for some extra space. And we got our first snow last night, just a little light dusting, not sticking around very long. And that's January 2020.